Cenovus Energy increasing its takeover bid for rival MEG Energy. It looks like there was pushback from MEG shareholders. They wanted more. The CEO of Cenovus says they were calling for a share of the combined company instead of just cash. So Cenovus increased the stock component. We're joined by Cole Smead, CEO and Portfolio Manager at Smead Capital Management. Cole, thanks very much for joining us. Always great to hear from you. So not a huge increase from Cenovus. I saw it, according to the calculation, but maybe 5 to 10%, depending on the movement of the stocks. Were you surprised, though, that they would increase the offer?
The answer is no, but I kind of feel like a winning Jerry Jones right now, and I'm speaking for myself, my colleagues, and the investors of our firm. I think it has to be said. How about the MEG shareholders, Andy? That's who's kind of running the show now. There's really three people at the table. It's the MEG shareholders, it's Cenovus, and it's Strathcona. The management and the board have really nothing to do with this. We've just seen the board could say, "Hey, you should take this offer," and what do the shareholders say? No, we'll block it. And that's what's going on right now. So, you got to really take the management, the board out of this calculation. Do I think MEG shareholders should feel emboldened? 100%. 100%. And I think what it teaches us, Andy, is this is something that we're going to see crop up in the energy business over the next 2 to 3 years, where investors wake up and say, hey, we're worth more in the hands of someone else to ourselves. And therefore, let's auction off our business. This is an open public auction. Obviously, anyone could come in and bid potentially. Right now, there's really only two bidders, and that's only foreseeably who would be at this table. Look what Civitas has said last week, and that they're going up on the auction block. And there's talk today out on Bloomberg of SM Energy being the acquirer. That's the smaller business, by the way. And so I think we're just going to continue to see these public auctions go on, whether it be in unique assets or in public companies. And I think investors are going to win off this.
Right. So remind us, Civitas Resources, there's talk that it could combine with a Permian Basin rival, SM Energy. And so that could be a deal worth $14 billion US.
Yeah. So if you look at say the MEG Energy structure, for example, you're going to go and look at G&A, for example, as a percentage of revs. You don't need as much G&A. Go look at IMO's I'll call it firing season, cutting 20% of their staff, which is non-field, right? The most valuable people in this industry are the people out in the field. The least valuable people in this industry are people sitting in corporate offices in general. And if they are not lean and effective for investors, they are going to get kicked out to be run by someone else. And I think that's really the theme that people should take away from this. So it's a game of scale. It's a game of being lean to provide the highest investor return, because to call a spade, this has been a terrible industry for investors over the last 20 years, okay? It's been incredibly good the last 5. Once these people found Jesus, they did not lever themselves anymore, and they quit wasting money in CapEx. And so we're now in the era where this show's ran by the shareholders, not by the board and management. And if the management teams think that they are going to dictate to shareholders how the world works, other companies will do a better job of that, or these shareholders will do that themselves.
So you feel Adam Waterous of Strathcona, who's been the unsolicited suitor for MEG Energy, you think we haven't heard the last from him?
He who laughs last might laugh the best. Let me just run through some numbers, because I think people have to understand this. Let's take Cenovus's own numbers that they put out in their report: $400 million of pre-tax savings. Let's just slap an 8 times multiple on that number to figure out what a longer-term investor would value those pre-tax savings at. That's $3.2 billion. This price increase that MEG moved up yesterday off the Cenovus offer is just a little over 10% of that. I call it about 11% of those savings. And so the real question of this between Cenovus and Strathcona is who is willing to provide more of the future benefit to the current MEG holders to win a deal. And the person that provides the most future benefit, which could be two things: 1, price; 2, the level of stock ownership in the new combined entity, is a big determinant. Even in the Cenovus offer right now, only half of the deal is in stock, which means as a MEG shareholder on behalf of our investors, ultimately we only get half of that good future, we don't get the full good future. I think another way of looking at this, and someone mentioned this, and I think this is an interesting way to think about it. If you go look at the recent Foot Locker, Dick's deal, there was an all stock or cash election in that, where ultimately the shareholders decide. Let's just use Adam. Adam, in my opinion, will come back at a higher price because ultimately he sees more value in this. He is the most bullish on oil in the space, and he'll pay the highest price. And that's why I ultimately think Strathcona is going to be the winner. But he'll allow us as shareholders to go out and own alongside of him to own this bright future. And I think the people that were long MEG were bullish oil, and they thought there was a bright future. I think that's one of the key attributes that have been missed out in these Cenovus' offers, is they're dealing with the most bullish oil investors in the space, and they think the future's bright, compared to everyone that got out of the stock the last 6 months as OPEC plus scares feared them out, or just this deal smoked them out of the room.
And can you remind me, I'm stupidly, I've forgotten, is Strathcona's deal, is it all stock?
It's all stock currently. So even now, if you use like what the close was yesterday, at the close, Strathcona gave you a higher price and all stock. And so again, if someone asks me, Cole, why is that in your interest for your investors? The answer is because they don't have to pay capital gains on the stock.
Right.
And therefore, they just roll those capital gains going forward, and they're getting all the future combined benefits of the companies. So use that $3.2 billion that I mentioned, Andy. That's a big number, okay? When this all started, that was, half of, MEG or more. Mm-hmm. And so that's the number people should be thinking about. How much should the buyer give up in this deal to incent people to come along? Obviously, the more stock that goes along for the future buyer, that means they're sharing in the risk with MEG shareholders. And here's the catch. If the more stock that goes on, that means they want the MEG shareholders alongside of them in this combined venture together as we move forward. I haven't even included any net operating losses that can be realized in MEG's case, because they have those sitting on the balance sheet. But further, when I say $400 million, that could be low for two reasons. One, if the price of oil is higher, you pay a higher multiple for those savings. But two is also that a lot of people would argue that $400 million is low. By the way, that's just, Andy, just to give you a sense, $400 million is 13% or you'll call it about 10%, I should say, of MEG's revenues. That's how out of line the savings are relative to the existing management board structure. So if someone else can run our business and save 10% of the costs off the top.
Did Cole? I think Cole might have frozen up there. We got the gist of his remarks. We always love hearing from him. He thinks there's a good chance that Adam Waterous of Strathcona comes back with the deal. And fascinating that he thinks, Cole, you're back. Sorry, we lost you there for a second, Cole. So I think we've got you. So you think Adam Waterous we should watch there, because the MEG vote got delayed as well, didn't it?
Yeah, I think this is either a three-step dance or a one-step dance. 3 steps being Adam raises, Cenovus comes back again, even though they say they won't. Mm-hmm. And then Adam, casts the final blow. Or the next move might be an all-out bear hug. And a bear hug would be a price that just scares Cenovus out of the room.
I think we have to jump, Cole. Thank you very much. Always love getting your take.
Thank you.
Cole Smead, CEO and Portfolio Manager at Smead Capital Management.